is relatively a new field, but it has already become an essential tool for the businesses, especially when it comes to fight the climate change. So businesses has already started calculating their carbon footprint or greenhouse gas emission footprint for various purposes. Either they want to start reducing their emissions or footprint to improve their brand equity or sustainable branding, or to meet the reporting requirements of various stakeholders. It can range from government, regulators, customers, suppliers, or any strategic partner, or for their own purposes. So carbon accounting is one essential tool which every business is now trying to use for various reasons. Let's see what is carbon accounting. Carbon accounting is a systematic process of measuring, managing, reporting, and tracking the emissions. Two major frameworks which are used globally is one coming from ISO standards and the other one is greenhouse gas protocol. Greenhouse gas protocol is adopted by various global frameworks and it is endorsed by various global frameworks. Above all, the Global Sustainability Reporting Framework, which is introduced recently by IFRS Foundation, they are also asking you to start calculating your carbon footprint using greenhouse gas protocol. That's why today my methodology will be more related to greenhouse gas protocol. Just like financial statements, when we talk about accounting, we need data. So for carbon accounting or greenhouse gas emission accounting, we use two sets of data. One is the business activity data and the other one is emission factors data. So we collect these two datas, do the processing to meet various purposes and which I have mentioned you before. So how to start carbon accounting? Let's see the steps. Boundary setting, that is the first step. Then calculating the emissions, analyzing the results, and reporting for the purpose you are doing all this carbon accounting. The first step, boundary setting. Think about if it is a simple business, one entity organization, nothing to decide, you will just decide that if you want to start doing the carbon accounting for the whole business or the part of the business, or if it's a complex business structure, it is based on parent companies, subsidiaries, associate, joint ventures, investments, and many entities are involved, then you have to define a boundary, and usually selecting of boundary is related directly to the objective why you are doing the carbon accounting. So the first thing is, in either case, you have to set a boundary that for which entity or for which business unit you are starting your carbon accounting. Once this boundary is defined, then you have to enter into that boundary and decide that what are your direct expenses and indirect expenses. Sorry, this is not financial accounting, this is carbon accounting. So you have to differentiate between direct emissions and indirect emissions. And the terms which we'll be using now on for direct emissions are scope 1 and indirect emissions are scope 2 and 3. What is scope 1 and what is the business activity data under it? Everything which is owned or controlled by the reporting entity or the reporting boundary, the entities in the reporting boundary, that is coming in scope 1. Let's see the examples. It can be combustion in owned or controlled boiler, machinery, building, processes, whatever the reporting entity is either controlling or it has the ownership with the reporting entity. You will be just collecting the data where the fuel is combusting and add this activity data under scope 1. What is scope 2? Scope 2, emissions originating from the generation of purchased electricity, from the purchased electricity which is consumed by the company, and the purpose can be heating, cooling, It can be any other purpose for which you need the electricity and use into your reporting entity. That is coming under scope 2. What about scope 3? Everything other than this is scope 3. What left? The left is value chain, your upstream and your downstream value chain, your supplier side, your buying side, and your selling side. So all kind of activities which are either your upstream related activities or downstream related activities, these are categorized into scope 3, and 15 categories or 15 ledgers or 15 accounts are defined by a greenhouse gas protocol when it comes to scope 3. A few are already mentioned in the slide: capital goods, business travel, use of goods sold. So, like this, there are 15 categories. And when we are calculating the scope 3, you open all these 15 categories and check that are all these 15 categories are related to you, or a few of them are related and few of are not related. So this is very judgmental. You have to decide, you have to check with the number, with the nature of the activity data. So this is now what is apparent on the slide, that this is the whole inventory which is coming under carbon accounting. The inventories actually of these 7 gases which are shown at the top, and these 7 gases are result of 3 kind of activities: one which is coming out of your operations directly, the second which is coming from the purchase electricity, and then your upstream and downstream activities. But your greenhouse gas inventory will be 7 gases. So you will be just collecting the activity data, which can be either the fuel in liters, or gas in its measuring unit, or electricity in megawatt hour. So you will be compiling all these this greenhouse gas inventory, and then the second data you need is the emission factor. How these liters or this electricity I have to convert into emission numbers. So you will multiply your activity data with the emission factor, as you can see the first half of the equation, and these emission factors will convert your activity data into emission values. Let's see the example. Fuel combustion 10,000 liters, you are multiplying it with the emission factor, and you are having the emissions into one unit, which is CO2e, carbon dioxide equivalent. Then it comes to electricity generation, 1000 kilowatt, and multiplying with the emission factor, again it is carbon dioxide equivalent. How? Why one unit is there? Beside the fact that we have 7 gases: carbon dioxide, methane, nitrous oxide, fluorocarbon family. So how we can only report into one unit, that is carbon dioxide equivalent? Now you can match this concept with the financial statements. Just imagine that you are doing the business in US, and your all the transactions are reported into US dollars. And then you have the transactions in euros or pounds or any other currency of any other country. Then you have to convert those transactions into the reporting entity's currency unit. Likewise, all the 7 gases you have to convert into one unit, and that unit is carbon dioxide equivalent. How we will do that? We will be doing this. If you see the second half of the equation, you see 3 letters here: GWP, global warming potential. So you will multiply your total emissions. Either the emissions are of methane gases, emissions are of carbon dioxide, or emissions are for nitrous oxide. You will multiply it with GWP to make it into one measuring unit, that is carbon dioxide equivalence. Let's see how it happened. You will use the databases which is already there. Every scientists are calculating this GWP, and they are issuing the assessment report that what is the latest GWP. We are having now 7th report right now available. So if you see here they have given one number to carbon dioxide, and in relation to carbon dioxide they have given 27 to methane, 273 to nitrous oxide, and then so and so on. So what they have imagined, that suppose carbon dioxide stay in the environment for 1 year, methane stays 27 years, and then nitrous oxide stays 273 years, the concentration of these emissions in these gases in the environment. So you will multiply, suppose your data is into methane, as it is visible on the slide. So if it is in methane, you will just multiply the emission numbers with the number of GWP of methane to make it equivalent to carbon dioxide equivalence. So here, if you see the last in the end, 27 multiplied by methane, and then it is coming to 27 carbon dioxide equivalents. So in this way, and using this equation, which is visible now, activity data multiplied by emission factor. So activity data can be into your own operations. Activity data will be your purchase electricity, or it will be in your upstream and downstream activities. So scope 1, 2, or 3, all are coming in the activity data, but segregation. You have to keep the direct, indirect, and further segregation of scope 1, 2, and 3. And there is a basic major reason why we are segregating it, because we have the direct control on scope 1, relatively less control on scope 2, and more less control on scope 3. But we can do some kind of mitigation activities to control scope 2 and 3. We will discuss this later in another session. So moving back to the equation, so you will just multiply your activity data with the emission factor. The databases are available from where you will be selecting your relevant emission factor, and then if there are multiple gases are involved into your activity data, then you have to multiply it with the respective number of GWP, and then you are coming to carbon dioxide equivalents, and all your footprint will be calculated in one measuring unit, that is CO2 equivalent. What are the sources of these emission factors? You can use greenhouse gas protocols tools, and these databases are already built in. You can use IPCC data. You can use different government agencies are also introducing or publishing the databases for emission factors. DEFRA is UK based, and then EPA is US based. You have to select which databases are more relatable and more applicable to your jurisdiction. You will just use that emission databases, and you have to report into your sustainability reporting or into your carbon calculation or methodology, that which databases you are using to find out emission factors which you are using in your carbon accounting or emission accounting. And that's all from my side. I hope you understand, and see you next time. Thank you.